Hello, everyone. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Mike LoPiano. We are starting to see some similarities in terms of our technical layout and our options data that look a little bit like what we saw back during the week of 12/6 options expiry. That is when we saw Roaring Kitty post his Time U cover on the 5th of December. Consequently, this was also the week when I was banned from Reddit, so I have particularly good memory of this week. So some similarities, some differences. We're going to break down some of those and try to think about what we might be expecting heading into this week's trading. So let's, before we get to it, let us stop in for some of our gratitude, and that goes out first to GME Sure Why Not, aka Feck It Be Grand, for sponsoring today's video breakdown and newsletter, as well as to our monthly contributors Dat Screfto, Ken Wedmerland, and Not Medical Advice for helping offset some of my data expenses on a monthly basis. Thanks go out as well to everyone who has contributed in the past and will be contributed going forward. You guys help me continue with my research and publication efforts here for the broader GME investment community. Thank you as well for everybody who's left a comment, a question, just expressed appreciation. That always peps me up, keeps me going, keeps my motivation and spirits high. So thank you very much to everyone who has contributed in one way, shape, or form. So interesting day yesterday, certainly after our price action, after this particular, this bit of a slip, which we'll break down in a little bit. Something of a peculiar day, right? We sometimes get these days that come up on GameStop that go, what was going on there? What happened there? Exactly what stimulated that type of move? But a little bit of excitement in the after hours, certainly, with the announcement that GameStop, well, not by the company itself, right? Not by GameStop, but rather by, what is it? I think his name is Stephen Etienne, but like Stephen Trudeau or Trudeau, I think is his name. Trudeau sounds right. Stephen, certainly Stephen. No, I was right. Tétrault. Stephen Tétrault has acquired the rights to GameStop Canada. Well, not just the rights to GameStop Canada, but has acquired all of this particular business. So that's particularly interesting from a fundamental point of view. I expect we'll be getting more details about that once the, potentially in the next, just about another month, right, when we get our annual report. I should say our annual shareholder meeting and our Q1 earnings report. This is estimated, was thinking about this a bit based on, so revenue was something around in the ballpark of about 120 million Canadian dollars last year. It did operate at a loss, so applying something like a 0.2 or a 0.3, revenue multiple on that, it comes to something like 50 million Canadian dollars, which is around 40 million US dollars. So, it's not a ton, but that does add something to our net asset value. So that's a little bit more cash that goes ahead and raises that net asset value floor, just, by ever so much, but kind of every drop in the bucket helps, probably adds a few cents there to our net asset value floor. So certainly interesting to see that develop. Right. Somebody asked a question, especially the other day, I forget exactly who it was, but asked the question, hey, are we, like, how do we actually get over 30? Like, how does the company actually manage to do that? How does, I should say, right, how does the stock price actually manage to do that based on all of these crazy things that are going on, right? We've got, what can I make today, especially went on a pretty nice streak of posts here, talking about, going into a deeper analysis of Regulation Show Rule 203A and Rule 203B about, or I should say DTC Rule 203A and 203B, and looking at, basically the language that is involved in what sorts of settlement activities are exempted from regulation. And, if you declare, a good faith mistake, whether that is just in general with respect to a long sale, or that is done for the purposes in terms of a short sale for quote unquote bona fide market making activities, these organizations that engage in market making can essentially violate the rules at will, seems to be what's suggested there. So how does the company actually get over some of these thresholds? How does it get over 30 and hold over 30 without essentially being brought back to earth on the heels of these liquidity influxes and these synthetic liquidity influxes? What actually has to happen? And the only sort of reliable predictive measure there is by increasing the net asset value floor. So either that's done via at the market offerings, convertible bond offerings like we saw that just kind of add cash to the cash pile, and then sort of that gets rolled into treasuries, and then treasuries continue to appreciate and add to the cash bottom line. Or by investing in assets, right? So investing in Treasury reserve assets such as Bitcoin. So, for example, if Ryan Cohen and company did manage to invest in Bitcoin, if they say put $1 billion of GameStop's cash pile into Bitcoin back around when it was $75,000, now we're in the mid 90s again, right? They could have added 200 to 250 million in terms of net asset value to GameStop's fundamental valuation. So things like that, right? So appreciation of investments, not just the acquisition of more capital via the leveraging of the volatility of the company. This also can raise up our sort of that kind of 2x net asset value floor that seems to be that sort of baseline in our price action there, right? So once that gets over 30, right, then it'll require some significant appreciation, several billion more dollars in net asset valuation. But another way that it can come is through potential sale of company assets, like we've seen. So the underlying business, Ryan Cohen has been interested for some time in reshaping the underlying business. This has been a core part of his mission, especially over the past few years. He outlined this actually back in his letter to the board in, I believe, November or December of 2020. It's something he's been focused on during his tenure as CEO. And right back in February, this is why I have this tweet here. Back in February, he announced his intention and GameStop's intention to sell GameStop Canada and Micromania France. So it does look like that GameStop Canada sale has gone through. That will do several things. So on the one hand, that puts some additional cash into the GameStop war chest, as it were. And on the other hand, yes, okay, it will result in a mild decline in revenue, but it will also take away, I guess, what is viewed as some of GameStop's less profitable stores. So again, this is a part of the GameStop business that was operating at a loss, much like its European outlets. These were stores and locations that likely GameStop strategy the board did not view as worth continuing to invest in, and that returns would in fact be better for access to the underlying capital versus attempting to turn things around, especially given Canada's current stance towards, certainly towards taxes. That's to say the least. So what does that mean for us going forward here? Does that mean, okay, we're getting some cash on the cash pile? Do we start to move up now? What does that mean for a net asset value floor? As we discussed several weeks ago, so let's hop over to some charts, hey? Right, so I think it came to, if you factored in, if we were factoring in prior to the completion of this of the offering, the net asset value floor was somewhere in the upper 20s. I forget the exact calculation. With the Q4 cash added to the pile, it went up to around 21 and change. And then with the infusion of capital as a result of the convertible bond offering, if you counted those shares as circulating, so those convertible bonds map to about 50 million shares. If you incorporated that into the implied outstanding of the company, which I think would take the company up to about 497 million shares total outstanding, and you took the total valuation of the company's net asset value, so around 6.3 billion, and essentially said the underlying business was worth zero, we'd be looking at a net asset value floor, a NAV floor, a 2x NAV floor somewhere in and around 25.15, 25.20, something like that. So this is a small drop in the bucket, but it does more or less raise us up maybe a few cents, right? Maybe a few cents in there, and does nothing, right, in terms of the outstanding. So that's about as conservative an estimate as you can make as to the net asset value floor. We did look a little weak yesterday in terms of our technicals. Not not kind of the best day here. This is also our third. Well, it's not a third red close, but third sort of red candle day here in a row. We did fall below and close below the 100-day moving average. We only closed just a couple pennies above the 20-day moving average. So that could certainly look worse. I did speak yesterday about how this particular cross, so the cross of the 20-day moving average and the 100-day is a bullish indicator. Certainly this kind of price action move here, where we've got these kind of three, right? This almost looks like a sort of double top pattern here, and then kind of a move down, right? So it doesn't look. It sort of looks like this, right? It's a much less volatile double top, right? But it sort of has that characteristic to it. With this sort of 1, 2, 3 day kind of move down, and then of course a really big move down, right down through the 50-day moving average, and then we kind of just continue down from there. So some similarities there in terms of how we're sort of behaving, that kind of shape in our daily technicals. But we also had some similarity, I would say, heading into this sort of 12-6 formation. I've talked about the importance of that sort of lull earlier over the past couple of weeks, is saying like, okay, we have these sort of 5 weeks up. We then have a bit of a lull. And we seem to have had a bit of a lull last week, but now we're starting to see some of that bearishness come in, despite the fact that we're not really looking overly bearish in the broader overall market. So I don't know what really is causing that, right? What's really causing that sort of transposition to the downside, right? If we look at SPY, okay, there is a bit of caution. We sort of were a little bit weaker yesterday. We didn't, bull up, but it's still not yet kind of doomsday conditions, right? So actually a bit less skewed bearish compared to yesterday. Still skewed bearish, still skewed towards puts. May OPEX still skewed towards puts. So that's kind of the basic sort of market outlook there. But we're not really falling down super hard to the downside. Very interestingly, right, though, GameStop just came out of the gates, a little bit of weakness, and then just fell off a cliff on, no news, no sort of contextual issues in terms of what we were looking at in the market. It just fell down by $1 on relatively lower volume. So what was going on there? It does look like we did have a bit of strategic order flow rerouting. So the top 7 orders on the day, with the exception, so 6 of the top 7 orders on the day look to have come in. Well, 4 of them at the ask, 2 of them we're not exactly sure, but they were all clustered together between about 9:30 and about 11:30. Totaling maybe about $15 million and several 100,000 shares, about 250,000 shares. Not a ton, but in GameStop's lower liquidity environment at the moment, in terms of, I guess, share transactions, not necessarily lending liquidity. This can make a difference. So it did look like a sizable amount of, larger order flow was just redirected off of the tape. So when that happens, right, when the price starts to move down, larger buyers go, ooh, okay, I'm liking these prices. And then rather than having that volume come in and then sort of buy the price back up, it just gets taken by a dark pool, right? A dark pool, whoever is running the dark pool, a broker, then goes, okay, yep, we'll take that, right? We'll take that trade. Okay, we'll take it and fill it. shares that the broker may or may not have, right? They'll essentially FTD that. They'll say it's an error, which is this exact phenomenon that What Can I Make Today was talking about yesterday. So this is this instance of a market maker who is engaged supposedly in bona fide market making activity is just allowed to make an error, make a mistake in good faith, attempting to conduct market making activities, and then can internalize all of this buy volume by saying like, oh yes, I'll make a sale. Here you go. And this reroutes authentic demand for the stock off of the lit market. So if something like this occurs, right, it can be, options traders can chase it, it can move down, and at points where it might be offset by the return of authentic buying demand, that buying demand doesn't show up. It sort of gets internalized. It gets moved off somewhere else that doesn't affect the price intraday. So I mean, I don't necessarily know exactly why this day in particular was selected to make this happen. We have been moving, I guess, relatively flat for a number of days. I suppose last week I was going to say last week I was more so expecting something like this. This does, as I intimated earlier, this does introduce a bit of weakness into our overall technical situation. We could, according to this, right, we could go ahead and move down toward the 200-day simple moving average. So if we look, 204 hours. So we kind of have this set up in our landscape to move down here. This was another instance that reminded me of our chart actually back on 12.3, 12.4. So you'll recall, right, we had that precipitous. So if we bounce back over here, right, so where are we here? There we go. So, right, so we moved up pretty strongly, and then all of a sudden began transposing down for a number of days. This one certainly looked like, right, so we moved down through the 24-hour, we moved down through the 54-hour, we had moved down, we found support at the 104-hour, but then it really looked like, okay, we're going to move through the 104-hour, and we're just going to sink down into the kind of 24-ish area ahead of earnings, and we're just going to go straight back and go straight to this 204-hour to find support. The only thing that interrupted this, of course, was Roaring Kitty. Whether it was Roaring Kitty himself or whether it was Roaring Kitty merely referencing some other sort of phenomenon going on in the background, this saved the stock price from plummeting below the 104-hour moving average, which then served multiple times, as we can see here, as a support then into this double top formation around 35. So we are looking a little bit, right? So I guess here over on Trading View, it is showing that the 104-hour is still below us. So that's different than Thinkorswim, because Thinkorswim is also involving extended hours trading. So I'm not sure exactly what to make of that. Whether that means we've moved past the 104-hour support. We actually did. So I'm looking over now at my on these charts, right? We did skirt actually the 104-hour over on Thinkorswim, right? The data is a little bit different. So, I mean, potentially, we do still find ourselves positioned to get some support there at the 104-hour. It is sitting just above 2570, which, we tested multiple times as a historic support earlier in this sideways phase after this kind of bull trend leveled off. So interestingly, right, we might find some support there. Heading into, on this 4-hour chart, heading into today's trading. On our daily chart, we also can find, right, so like I said, we might see a bit of reversal in this area with respect to the intersection of the 20-day and the 100-day. We also have, if we bump back over here, we're about to touch RSI oversold on the 4-hour. The last time we did that was, the move after the convertible bond offering. So in terms of relative strength, we're actually right now moving into the territory that we saw just after the convertible bond offering, despite the fact that we're priced up this high. So I wonder if that has something to do with the elevation of the net asset value floor and how we've stabilized up here for the better part of the past 3 weeks. Very interesting to see that take place. As far as what that means, right, whether that's definitive or authoritatively forward predicting, the answer is, no, it's a good sign. It might potentially be meaningful, but we're sort of, I would say, right, these are tough moments here. We move into muddled signaling, right? So our technicals are kind of muddled. I would say, right, liquidity is very high right now. That's right. These are things combining that I don't necessarily love. I mean, I'm not ringing the bells and being like, oh my gosh, lock the gates. I think something's about to go really wrong. But, higher liquidity, right? So we've seen creation come in on XRT, but we haven't seen really any attendant buying to accompany that very substantial creation yet. We see that XRT cost to borrow is up, which is not bad, right? So it did go up quite substantially again before market open and during the early market hours yesterday. It has come down a bit into today's trading. GameStop shares to borrow also very high. So when we have this kind of lending liquidity that's elevated, that says to me, okay, there is a potential, right? We're not in that situation that we were in coming off the sort of 1129 dip, or coming off, even back around like 110, so January 10th, right? We were in a state of liquidity restriction, and we're not so much seeing that. I mean, we don't necessarily know what's going on behind the scenes with a lot of these ETF creation orders and whatnot, what's going on with ETF FTDs, especially with XRT. But so this is not, kind of 100% encouraging. Let's say, like it's adds some muddled signals, and it does make me feel a little bit cautious. Not necessarily sort of pulling out, bullishness overall. Our momentum indicators, of course, are still looking good. IV, of course, is down as a result of all of this liquidity. Right, if we scroll down a bit, daily IV kind of flattening, right? The 20 PMO is kind of coming down a little bit. This also is another factor that makes us look like we did kind of around the week of 12.6, so coming off of 11.29 and then 12.2, right? We got the PMO, the 20 PMO started to curl down on the daily chart. It sort of crossed below the 35, and then only once we stabilized on top of the 20 did we kind of, try to get off that and uncross, and we stayed cross, and our deeper 55 was still moving up, and then, right at this double top, we sort of gave up here. So not quite there, right? We do have 55 PMO cross, I guess, coming up in the next 2 weeks or so of the zero line, cross of the zero line, but we do show some weakness there, I guess, in the shorter term. That's starting to level off. Still overall bullish, but starting to level off. Our options landscape also is a bit muddled. We've got a lot of mixed trades. We've had a lot of mixed days, slightly bearish. Positioning overall is a bit difficult to tease out. If we take a look at our overall gamma exposure outlook, with respect to our expiries overall, things don't look that different. If we do separate these out into our next 2 expiries, we can see, positioning has shifted toward, we do have some put positioning shifted, shifts having occurred. We do have a concentration here also around 27. So kind of the inertia of this hedging system is down and around kind of exactly where we are at 27 or 26.5 based on just this week's gamma exposure. That does change a bit going into next week, though, again, it's still a bit confused and mixed kind of around this 26 to 27 area. Not sure of the directionality of the 28 or 29 calls here, of course, for this week, They are on the short side, so that doesn't necessarily lend itself to support into these upper sort of price ranges close to 30. The 30 call wall does come back. It's not really there, right? 30s are not representative of too much of our gamma for this week. They're a pretty weak position, but they're still strong and they're there in force heading into next week. So maybe things are a little bit more bullish in terms of options positioning heading into next week. But again, it's kind of muddled. So I don't necessarily want to come out and say like, oh no, this is bearish, everybody watch out. Right. Some of our deeper indicators are still looking more or less stable. But I would say this is the type of move that I more or less expected to. I was thinking of something like this kind of happening early last week. It didn't. Maybe just off by a week in terms of anticipating when that was going to show up. If we look over at Richard's ETF model, for example, which he's been experimenting with, based on the flows of what's going on with ETF creation and redemption, right? We still have something of an estimate that there'll be some kind of a move up maybe later in the week here. Interested to see how that plays out, to see how this model ends up working. But then it does suggest a pretty big fall off a cliff, basically back into the 24-25 area immediately following. So I guess this would be into something like into May OPEX or something like that. I'd really recommend you go check out Richard's. Yeah, basically into OPEX, right? So that's the 16th. That's exactly OPEX. So yeah, I'd recommend you go check out Richard's videos and go check out his data tabulations here yourself. They're definitely worth. I like to think through and try to understand and apply some of these principles to some of my own thinking here. But by and large, right, my conclusions on what I'm seeing is that they're pretty kind of inconclusive, right? And generally, when I see this kind of muddled configuration in our technicals and in our options data, it makes me kind of cautious, not necessarily overtly bearish, right? We do sometimes get signals that are just like, oh man, it's going down. Not seeing that exactly right now. But that kind of indecisiveness, I think, does lend itself to a kind of weakening or a slight kind of listing to the downside, especially if we do see some of that additional bearishness kind of pop up in SPY over the next few days and into May OPEX itself. So very interesting, certainly hopeful of something of a move to the upside, sort of into the end of the week, like might be suggested here from this model's ETF read, but also, wary of the possibility that some of this muddledness may develop into something more bearish heading into May OPEX, especially because we do see max pain down there around 2450. So, very interesting. Definitely worth monitoring. Definitely worth, some patience here, I would say, on my part. So I'm playing this very patiently is my orientation to it. So that's the outlook for today. Certainly good news in terms of GameStop Canada, but some mixed signals here, I suppose, from our options and technical data. So staying cautious on that front. Look forward to seeing everybody, throughout the day today in the comments and such, but definitely for tomorrow's video as well. So thanks very much, everyone, for watching and listening, and we'll catch you next time.